Scalping is a very simple and powerful way of trading. It allows you to get in and out of the market as quick as possible and stack the wins. In this video, I'm going to share with you two simple scalping setups that I tend to use when trading. Now, if you find this useful, you know what to do. Hit the like button, hit the subscribe button, support the channel, and I'll keep on getting these examples out to you. Let's get busy. Okay, so before we get started, and I'll show you examples of some trades I taken this week using these setups, we need to talk about market structure. We need to understand market structure, okay? So here's a quick example of what price looks like when it's moving up, okay? So this is an uptrend. So it pushes up, pulls back in, pushes up, pulls in, pushes up, and so on, okay? Some people may know this as a break and retest. So it breaks out of this, breaks this high, taps back in, and then pushes back up, yeah? And some people like me know this as a pole and flag. So it pulls up, flags back into that zone, pulls up, flags back into that zone. So you can see this actually on a lower time frame, 1 minute time frame. You can see this on the daily. You can see this on the hour time frame. Any time frame available. This is how price moves. So whether price is moving up or down, it tends to move in this kind of structure. Okay, so this is the structure. So you've got the uptrend here, and you can see it's clearly going up. It's not moving very fast, and there's variations of this. You've got some really aggressive ones where it just pushes straight up. I'll give you an example. Pushes straight up, has a little pullback, like this, and then pushes straight up again, very aggressive. And this tends to happen when there's a news catalyst, and on a 1 minute time frame, you know, it's not actually breaking, coming back here. So it's not like a break and retest where you're waiting for it to get back to that zone. It's just pushing aggressively up. And then you got days where it's even slower than this, where it's just really choppy, where it's just, you know, let's get this right, where it's not moving at all in the direct. It doesn't seem like it's moving at all. So it's like this. It goes up. Let's move that down a little bit up. Not moving much at all, as you can see. And it almost looks like it's moving sideways, but it is slowly moving up, okay? So there's variations of this. You've got aggressive ones and you've got slow, choppy ones. So that being said, there's also a downtrend, which is the reverse of that. So pulls down, flags up, pulls down, flags up, pulls down, flags up. When price is moving at this speed, it's very easy to catch a trade. And I'm going to show you examples of that. I do like the market when it's like this. Very easy to catch a trade. You can see clearly where you want to enter from. So it pushes out here, pulls back in here, pushes out. So you could catch it when it comes back into that zone right there. And if you're, you know, really like confident, you can leave your stop loss just there, having like a 2 or 3 pip stop loss. If you like to be more conservative, you place your stop on the previous high or previous low. Okay, if you're trading up, previous low, yeah? And if that trend holds, you're good. If it doesn't hold, well, you lost. Simple as that. So that's an example of a downtrend. And then we have this ranging market here where price is moving up, but moving down. It's not really going anywhere. So a lot of people hate this state of the market because it's hard to catch a trend. A lot of people tend to trade with the trend. It's the simplest thing to do. It's very easy to see. You can clearly see this is going up. You can clearly see this is going down. By the way, you don't need indicators to see that here. So if you're still trading with indicators,
if you're doing it, stop it. Get some help.
You may want to reconsider that. So you can clearly see that where price is going. So in a ranging market, it's hard to see because it's not really breaking out of the zone. So this is consolidation, really, just ranging from the top, getting up, coming back down, going back up. People tend to hate this and they avoid this. I actually like this because there's opportunities everywhere, especially for reversals. Okay, so let's go back to the charts now. Let's go onto the charts and I'm going to show you some examples of trades I've taken this week using two setups that I feel is very powerful and very simple to learn with no indicators at all. Okay, so let's switch over to that now. So I took a trade today, this morning, and I took a trade yesterday. So I'm going to show you those two examples. But let's just have a quick look. Let's just zoom out. Like I said, you can see what I'm talking about. So clearly here, you can see the market structure as I mentioned. From price here, it's moving. It pushes up, pulls up, flags down, eventually pulls up, flags down, pulls up. That's an uptrend, okay? We had a little reversal here, and then it broke that structure by beating this low. And then what did it do? Eventually started going back down. So pulls down, flags up, pulls down, flags up. And that's on a hourly time frame. Then we got here the consolidation. So pulls down, should flag up and pull down again, and flag up here and pull down again to continue this downtrend. But as you can see, it stopped here. Then if it's going up, it should pull up, flag down here, push up, flag down, push up further. But as you can see, it's not really going anywhere. It's just come back down. So this is a range of market. So like I said, I do really like these states. There's so many opportunities, whether it's to trade with the trend going up, trade with trend coming down, or these little reversals here. You've got 3 options here. And for someone who scalps, having 3 options is great. I've got something to do on a daily basis. It's great. So anyway, let's switch down to M5. This is where I prefer to trade. You can also see this strategy on M1. You could trade it on M1. You could trade it on any time frame you want. You can see on M1 here again, pole, flag, pole, flag. This is how price moves. So it's very important to know that and learn how to read price action. You can see clearly, there's no need for indicators. You can see this is going down. If you wait for an indicator to tell you when to get in, you're going to miss these opportunities. I'm going to show you now how to get in, where to get in, and there's really 2 main options. So using this example, let's go to M5. I prefer trading on M5 because M1 just gives way too many entry options, and it just has so much information, and it's very misleading at times. And of course, it depends on the pair. So whatever pair you trade, get familiar with it, trade it often, and learn the behavior. Some pairs just move really aggressively and erratic. Euro USD is nice and concise. I know what to do. I know when it's peaking. I know when it's aggressive and so on, and I could time my trades. So before I get into any trade, I always check the news forecast. So people, I'm trying to give you exactly what I do because this is going to be helpful. I check the news forecast and I see whether there's any high impact news. If there's high impact news, you're going to see price moving very aggressively. When there's low impact news or no news at all, this is what we've got: slow, choppy price action. Some people don't like trading this. This is the Asia session. Some people don't like trading this because just to do that move could be an hour. Okay, so I definitely don't trade this session. I tend to trade this session, which is the London European session. So I prefer that, and then New York session moves even more aggressively. So it's important to know when your best time to trade. And for me, it's either London session or New York session if I can't find any setups. So at the end of the video, I want you guys to be able to understand what kind of state of the market we're looking at before you take your trade. So you're going to have a look per trade, figure it out, and be able to identify it, and you already know straight away what we're doing. So let's have a look at here. We had a pole, a flag, a pole, a flag, and at this point here, it pulls up, but it doesn't break this high, and it reverses. So immediately to me, I see that as a reversal in the trend, a break in the trend, therefore it's potentially going down. So I do want to trade it down. Today, I saw that breaking trend and I got into trade to take it further down. Very simple. So when it broke this structure, I got in. So this is one of the scalping strategies I tend to use often. This is available every single day. And when it's not available, the other setup I'm going to show you is what I use, okay? So this is a reversal of the trend. I like to see price coming up in one direction, coming in one direction. So if it's coming up, I like to see the reversal of this and trade it down. What I don't like to do is try to trade with the trend when the trend has been established well in advance. Okay, so this is where it started, and it's pushed up a fair bit. So for me to get in here to try to continue this trend, I'm becoming a part of the liquidity that's been generated here. All these lows here, potentially people have stop losses there. I don't like that. So when price is well established, it's very likely there's going to be a reversal. So I tend to look for the reversal in that situation. So price pushes up here, fails to break this high and reverses here and starts forming a downtrend. So when I saw this, actually, it was around this time, I saw price push all the way up here and it didn't beat this high here. As you can see, it just didn't beat this high here. It respected that high and turned around and broke it. For me, that is a clear indication that it's going further down to potentially run all the liquidity is generated. Now, remember, trading is about making money. So for someone to be able to make money, it means someone's lost money. So all these people here potentially are now objectives. This is the targets where money is going to be made, right? So it makes sense to be able to jump in this reversal now and go down and try to run these stop losses rather than try to trade with the trend. And if you zoom out again, you can see, I mean, on a higher time frame, it makes sense. We are actually, even though it's consolidating a little bit in the zone, we had all this aggressive selling here. Price pulls back into this last supply zone. So from this low to this high, it broke down. Price trended slowly up into this zone. You could have traded with the trend up. And when it got into this supply zone, wait for the reversal, which is what I did, and then sell it back down if there's a confirmation that this trend is going to be broken, and it goes back down. So I was able to scalp this morning. It took me about less than 5 minutes to analyze. I mean, I woke up, had a look at my phone, had a quick look at the news forecast, didn't see anything to be concerned about, saw the breaking structure, I got in, and I made my quick 10 pips here.
Yeah, boy.
So if it's coming up, we look for a drive up, pull back in, fake continuation and break in structure. It broke this low and now it's created a high and a lower high rather than a high and a higher high. And then when it comes back, you're looking for an entry point. Entry point for me is usually, best point is where it broke the structure, which is from this low here. So as you can see, price interacts there multiple times, and I saw it late, but I was able to still got in here and it ran. So it ran a lot further, but you know, scalping, I scalp, and I'm going to show you examples why. Well, you've seen tons of examples, but I scalp. This ran about 30 pips. I was able to get my 10 pips. 10 pips is a lot easier to get than 30 pips, and it's a lot quicker. So I'm able to make money using 10 pips. Why do I need to wait for the extra 5 pips, 10 pips, 20 pips when I could do that? And rest assured that I've banked that win, you know, rather than holding it and hoping it goes further and potentially when price reversing take me out. I prefer to scalp. This is something I just built from experience. If you are struggling and you are finding price keeps reversing on you, scalp, try that. So simple as. All right, so how did I manage my risk? Reversal of this trend is perfect for me. Why? Because my entry is there and my stop loss is in the best place. So I got in here, my stop loss was there. In this situation, I was risking 8 pips and I took it for 10 pips. It ran a lot further. It could have been 3-1. Very useful and powerful way of trading, like I said. But I'm happy to take 10 pips because it's a lot easier to get. I could do that consistently, and that makes my average win rate go up into the higher zones, like 80%, 70%. And I prefer that. The longer you hold it, you may find it reduces your win rate. I mean, you could catch a 1 to 3 risk to reward here, but the longer you hold it, the more likely you are going to lose that trade, and it reduces your win rate. My win rate on average is about 80 because I tend to scalp. Okay, so that was one setup I took yesterday, and that was the reversal of the trend. Yeah. So I really like that one. I've been working with that for a while. You've seen tons of examples. If you're new to the channel, have a look at my price action series and you'll see more examples of this. And I've got tons of examples on my live series as well. Tons of live examples on this structure here. So price moving up, reverses, goes in the other direction. Cool. Now, we also can, there's another setup I do like. I don't trade it often, but sometimes it's there, it's there, you know, it's the best thing to do. So now, as I mentioned earlier, I don't like getting to a trend when it's been established already, especially if it's well established, so it's had a few drives. So here's a trend here. I saw first thing in the morning, I noticed that it just started, okay? So it just started from here. So previous from there, it was coming up. So let me just zoom in again. Previous from there was coming up, had a little reversal here, and it started trending. Now I saw it around here. So as you can see, it's not as the previous one where I would have caught it around here. It's been established already, but it's not well established. It's not down here, you know? So I saw this opportunity and thought, okay, cool. Let's go for a trade where I am trading with the trend. And you can clearly see it's moving down. And for this one, there's really 2 points you can enter, okay? So let me just show you, the entry options. So as it pulls down here, drives down here, it flags up, it drives down again, it flags up, and it drives down again. We are looking at different points of entry. So let's look at this pole and flag formation here. So poles down here, at this low that it created, when it flags back in and breaks this low, this is a potential entry point, okay? So when it pulls back into the zone, you can enter there at the open. The second option would be to get it at the 50% mark of this zone. So from this low to this high, 50% is roughly there. You could get it in there, right? And catch that move. And you've got a better risk to reward if you've got your stop loss just above here. Now, this one is a little bit more tricky. It's not like this one where the previous one where you could clearly place your stop loss here, nice and safe. You see often that a price will come. If I was trading this trend here, I would want my stop loss just above this last flag here. And as you can see, sometimes price does this. It will come and stop you out and then go. So you're right in the move. You are trading with the trend, but price does this often. And this is why I don't like this setup too often, because if I was to get in here and I left my stop loss at the best place, which is at the top of that reversal here, that's 23 pips. I prefer to use 10 pips. I like to risk 10 pips. I'm happy to do 20 pips, but I prefer to use 10 pips. If I was to try to reduce my risk and place the stop loss just above here for 7 pips, I would have got stopped out. And imagine the state of mind you would have been when you saw price stop you out by like 1 pip and go in your direction by, let's see, if we got in here at the open, in your direction by about 80 pips. That happens too often. That's why I moved away from this setup. It's still a very decent setup, but you need to be a little bit more cautious, and that's why I prefer the other setup. So with this one here, what I tend to do, or what I did, is to use a risk to reward, manage my risk by risking 10 pips, looking for 10 pips. Okay, so let me show you the trade history here. Let's find my entry. I got in here, okay? So what I tend to look for is when price has already run liquidity. So what I saw here, I don't like this setup, but what I saw here is price had run liquidity already. So they already done the sneaky behavior. They already run the people who are following this trend using a tight stop loss. They run the liquidity there. So that's quite important, okay? So when it did that, I was happy to trade using this zone. So this zone will be from this low to this high, okay? That was the supply zone that sent this down. So when price pulled back into there, I got into there and I placed my stop loss just at the top of that zone. So got in here and I was risking 12 pips. And again, I was looking for my 10 pips, right? And as you saw, it ran down to about, from my entry, maybe another 30 pips. Or was it 50 pips? Let's see. About 30 pips. So I'm happy to take my 10 pips and I'm good because of this sneaky behavior that tends to happen.
Sneaky, sneaky, sir.
And this could have happened in any other time here. You could potentially get a reversal and so on. So I'm happy just to take my quick 10 pips. I'm in and out of the market as quick as possible, and that's where you want to be. You don't want to stick around and wait for the manipulation, see price take you out, and then continue. So if you are trading with a trend, you do need to take on board the fact that you are going to be a part of liquidity, and at any point you could be taken out. So it's very important here not to over leverage and use good risk management. Make sure you got your stop loss in straight away. And the best thing to do for the entries is to try get in at the open. So open. Some people like to get in at the 50% mark, 50% mark of this zone. From the naked eye, again, I don't need a Fibonacci tool for this. I can see roughly 50% mark is there. And as you can see, it did not reach there. Okay, from this high to this low, 50% mark is clear. It did not reach there. So I like to enter as soon as possible at the open, okay? Especially if price is moving aggressively, it's not gonna go there. So get in there, place my stop loss there, simple. 10 pips. Scalping is very simple. Let's not complicate it. If you want to scalp it and leave a runner, that's up to you. That's another way to get more out of this move. But for me, I'm happy to take these small moves and get on with my day and keep it simple. I don't need to watch the charts. And the less you are on the charts, less opportunity for anxiety or emotions to come into play and affect you today. And then you see the repercussions of that another day. So 2 very simple scalping strategies that's available on every single day. So there you go, 2 very simple, straightforward scalping strategies that I tend to use on a daily basis, whether it's trading with the trend or reversals. Very simple, very easy to manage your risk, and you could then stack up these wins like I do. If you like this and you find it useful, you know what to do. Hit the like button. If you're not already subscribed, hit the subscribe button, support the channel, and I'll keep getting videos like this out to you. This is Patrick signing out. Until next time, peace.